So what's up everyone? Last time I made a video and I got nice reviews. I saw that a lot of people liked it. So I decided to make a new video about the market. So I was like thinking what video should I make and what should the topic be. But I was actually thinking about how to find the delay between the two time frames or between the micro time frame and the micro time frame. Okay. I teach this a lot in the Sophia Fx mentorship, and I was also thinking, I think I should also give a little bit of it in the YouTube channel. Okay, so if you have not subscribed to the YouTube channel, I think you should subscribe now and like, okay, for more videos like this. So it's very important that you understand your market structure. Okay, I've always been telling people this over and over and over, and I'm gonna preach it again. Know your market structure, know where the market is going to go in the long term so that you can be able to interpret. But now sometimes when you know where the market is going in the long term, there are delays in price action. Okay, and meaning that your 4 hour can buy, but then your 15-minute is still not buying. Okay, so I'm going to teach you on how to know when the market is aligned with the 4 hour and when the market is not aligned with the 4 hour. So I just want us to quickly look at our charts right now, and you will see, as you see here in my chart, this is GBP USD on the 4 hour time frame. Okay, so one thing you need to understand, this is a big secret, okay, is that you only need at least 3 time frames when you're trading. Many of my former students will know what I'm talking about when I'm talking about a minimum time frame and at least a maximum time frame. So what type of a trader are you? Are you a swing trader? Are you a day trader? Are you a scalper? So if you are a scalper, then I would not want you to be on the 1 hour or even looking at the 4 hour or looking at the daily time frame, because it's gonna be of no use. It's not gonna help you. Okay, it's not gonna help you at all. So the best time frame that I want you to be in is actually the 15-minute if you're a scalper. So your 15-minute is supposed to be your structured time frame, and then your 1 minute is supposed to be for your entry. So you go to your 15-minute, you go to your 5-minute, and you go to your 1 minute. That's the basics, okay, of what you're supposed to look for when you're actually trading or as a scalper. So when you're a scalper, you don't actually need to even go to the daily, because you're only there for 15 minutes, or you're only there for maybe maximum 20 minutes. You're only there for maximum 20 minutes, okay, and you're done for your day. You're done for trading for the whole day, unless or maybe you will be scalping in and out, in and out. So let's say you are a day trader. Your minimum time frame is supposed to be a 15-minute, and your maximum time frame is maybe, let's say, your daily time frame. Maybe you can use your daily time frame to have an idea of what you're looking for in the higher time frame, so that you can interpret it and make the same interpretation on the 15-minute. Okay, and if you are a swing trader, you are a swing trader, you like holding the market for hours, for days, even for weeks, then my advice would be that you look at the monthly, or even starting from the monthly time frame, you go to the weekly time frame and use your 4 hour as your entry. You can go a little bit to see on the 1 hour. Okay, so that's now the foundation that you need to have. That's the foundation you need to have. At least you need to understand that. Okay, now that we have an understanding of what time frames you're going to use, it will be easy for you to translate what you saw on your time frames. Okay, so very easy that you understand that. So now, as you are looking at the chart right here, the reason why many traders are actually losing traders is because they'll be looking at the 16-hour time frame. Now the 16-hour time frame, each and every candlestick takes 16 hours to form. Imagine one candlestick takes 16 hours, and you'll be so lost in the market, and you would, it will irritate you, and then you might think, oh, the market's gonna buy because the 16-hour is showing a buy, and then when you come on the 15-minute, price might not even buy, nothing might even buy. Okay, so now you're just irritated by the market. Price action is irritating the hell out of you, and price action is actually not moving along with what you're looking for. And the price action might only move that buy direction whenever the New York session starts, whenever the London session starts, according to the pair that you are trading. Okay, so now then it's important. Okay, what time frame are you trading, or what type of a character are you? Are you a person that likes holding trades for a long time? Are you a person that likes holding trades for a short time? Those are the questions you need to ask yourself. If you know that, okay, I'm someone that would maybe hold my trade at least for 6 hours maximum, then what I would advise you is to look at your daily time frame. Looking at your daily time frame and saying, okay, price looks like it's gonna buy today. Okay, you just analyze the market basically like this, seeing that, all right, price came, broke this high, retraced, and then came to this POI area right here, exactly in these regions that you see price actually coming. All right, so price came in these regions, and then now that it came in that region, and it touched that region, I would actually be looking for buys from that region. Okay, so let's see if we can have some sort of understanding or a trade setup from that type of understanding. Okay, so we've been saying that, okay, we're seeing the price has been going downwards. We want to see price taking out that liquidity, and then from the liquidity being taken out, then we will start looking for upward trades. Okay, right? So that is the idea that we have on the daily time frame. So we'd actually be waiting for a confirmation on the 1 hour time frame. Okay, so we see basically that the 1 hour has this was impulsive, and then there's change of character, price moving downwards. So now we're seeing price moving downwards. We want to see price taking out this area so that we can start buying from that region. Okay, confirmation of trade, and then confirmation of also time in order for us to make that trade. Okay, basic stuff. So now we're waiting for the 1 hour to actually come and then take out that liquidity. There you see liquidity has been taken out, and you also see that there was a confirmation setup on the 15-minute. You see right here, confirmation setup, and then price going up. So let's say that maybe you did not find that, you did not find this, maybe you woke up in the morning and then that was not there. Okay, according to your time zone, wherever you are. Okay, then you actually look for more confirmation for the setup. Okay, maybe one of the confirmations might be, I want to see a change of character right here. I want to see a change of character, or some sort of shift in direction for me to start making this setup, right? So that means that whole time you're actually not even trading the market. You're not even looking at the market in a sense of bullish movement, because you see your selected area is not broken, and now there is really nothing you can do. Your hands are tied. Okay, your hands are tied, waiting for price to take out. Okay, so since we saw that price has taken out that area right here, taken out, which is now our change of character, so meaning now we would be looking for price to come somewhere here. If you are in my academy, you understand why we would take a trade setup in these regions right here, and then maybe targeting the higher regions. But then we'd see, okay, this is morning hours, 8 o'clock in the morning, seeing price going out like that. That would want us to look for buys right here. Okay, in order to maybe target this region right here. Okay, but just for this video purpose, so seeing price opening it right there, and you see the time, 9 o'clock in the morning. Whenever the price goes up, immediately we move our stop loss to break even according to your setup type, what you're looking for in the trade, and all that stuff, all the crazy stuff. Okay, and now the trade is still going on. I'm expecting it to go higher. Okay, so now your trade would have already been protected because of your entry. You made an entry already in time, and then there was a BIOS, and now your stop loss is at break even. So when price comes back, it just actually comes and takes you out at break even, so that you protect your funds. Okay, so things like that, those are the type of things I'm talking about. Okay, having a plan and looking at the market. But now if you're trading that, if you are looking for a setup, and let's say while you're looking for the setup, you are looking at the higher time frame, like the weekly and the monthly, and you are a day trader, you're always coming to the higher time frame, that's going to cause a lot of confusion. It's going to cause a lot of confusion. because sometimes on the weekly time frame the market can show that it's buying, and then sometimes while it's giving you that signal, it's actually selling, right? So those are the things that happen in the market, unfortunately. But for you to be at the edge, make sure that you have your three time frames: your time frame for buyers, your time frame for structure, your time frame for entry. Buyers, structure, and entry. Those are the three time frames that you need to become a successful trader. Okay, so let's say in this sense now that I'm a day trader, or let's say I'm a swing trader. So if I'm a swing trader, which I am, sometimes I'm a swing trader when I'm managing the fund, when I'm managing investors' money in BNF Associates. Then what I basically do is I look at my 3-month time frame, right? So when I'm looking at my 3-month time frame, I know, okay, the 3-month time frame is still bearish, obviously, because you see lows being created, and then market is not really breaking out of those lows, and then so since I see that, I know it's bearish. But when I move into price, I know that we're bearish high, higher time frame, but we might experience a little bit of bulls. Okay, and also I see that there is a main POI area here, and now there might be a reaction based on that POI that will cause price maybe to go down a little bit lower. But then at the back of my mind, I also know that, okay, I want to see price taking out these regions, for me to start looking for bullish movements to the upper side, some stuff like that, and then moving along with the lower time frame, going to the monthly time frame, in order to see, okay, as we see there might be a change and then price falling down, but that can only be confirmed after a few months. Okay, after a few months, because you see from the beginning of October, you've been seeing prices been going up to now. So there can now be a shift. There can be a shift, or price can still continue going up, but then it's still not confirmed that price might fall on GBP USD. We are still in that retracement form. Okay, ideas like that. So now that you know, okay, we're still on the monthly time frame, we're still on that idea of a buy, short-term buys. Then you go to the weekly time frame, looking for those short-term buys, confirming the short-term buys, and then making an entry either on the daily or on the 16-hour time frame, and then holding that trade for all that time. So this only comes with experience. This comes with a lot of patience, and you need to find out what type of trader you are. You first need to find out what type of trader. Okay, so very important that you understand your time frames. Very important that you understand the type of trader you are, because if you don't understand the type of trader you are, then it will also be difficult for you to know which time frame to use. Now that you know, now that I've given you an understanding of what time frames to look at and how to approach price, it will be easier for you. Okay, it also mix with your lifestyle, because there are many of you that are having jobs. There are many of you that are not really having time to trade, and it's also more risky. Let me tell you, it's more risky to trade on the smaller time frame. It's having a lot of risk, and a lot of stress and anxiety, and a lot of blown accounts experience on the smaller time frame. But also a lot of money can be made because it's moving fast. Okay, so the best way is actually to keep your money floating, and then holding it for a long time. That's actually the best, less stressful way. But then if you know that, okay, I know what I'm doing in the market and I've experience, that's what we do at Sophia Fx. We actually teach people to do both. We teach them how to do short-term trading and long-term trading. So understand your time frames, like I said, understand what type of trader you are, and it will be very easy for you to be profitable. No matter where the market goes, whether the market buys now, whether the market sells, you still have an edge on the market because you understand what you're doing in the market. Many people lose because they are over analyzing. If you read the book of Mark Douglas, Trading in the Zone, you will see that the guy always talks about over trading, revenge trading. Those are all psychological effects that affect you as a trader. The reason why you're blowing the account is sometimes not because you don't know how to trade, but it's because you're over analyzing, and also spending lots and lots and lots of hours on the chart. And after analyzing, you're going back again to see the higher time frame. If it's no, you already analyzed the higher time frame, and you know it's gonna buy. Why are you not waiting for your confluences? Why are you not waiting for your plan to play out? So that is very important for you as a trader. in order for you to be the best trader you can be. So I hope this video was very nice. Please subscribe and like the video, and that will help me, okay, with the algorithm very much. Okay, so have a great day, have a blessed day. Peace.